Take a look here at some commodities. It's Wednesday, September 21st, 2016. We're going to start off here with copper. I look at copper's possibility of rolling over with the stronger dollar. We had the dollar poke its nose through on the upside this morning, and it retraced some. I'm looking for copper to come back down through here. I think copper will have issues with the price of the U.S. dollar going forward. We do have somewhat demand in the United States we'll have going forward for autos and homes. But most copper that we'll see will be consumed in the United States because of the stronger dollar going forward here. So I'm looking at this as a possibility of rolling over and going under $2. Gold, talked about gold over the weekend going higher. That gold, we'll see some whippiness here with the FOMC and the dollar. I'm looking at gold with commodities here as rolling over, okay. But in the short run here, I noticed that the unbalanced volume in GLD was washed out, so we'll probably get chasers to come in here. On a bigger picture, you could say that this is working its way into a flag or a pennant type pattern here. This kind of thing, remember I was talking about 1400 last year as a target. We're up to there in my eyes, okay. I'm looking for other opportunities instead of trading gold offhand. Okay. Palladium, basically the other white metal besides silver, possibility of a flag there, but I'll pass on it. Palladium, I'd be looking for some sort of news on like cold fusion again, some sort of top on palladium. Platinum, basically the same thing as gold, is just a tradable bounce. I don't see any bigger structure out there as in a bull market. I think metals are basically bear market rallies from an oversold condition. Silver, basically the same thing. It's an industrial metal like copper, so it'll have its problems. Hardcore bulls, you can see this. I mean, this is where we've been. I'll give it a flag type setup here. And working on some sort of a breakout kind of there. That's on silver. Crude oil, this is a Fibonacci level. Like I said before, you know, basically, I guess I could say if it clears 47, get through this area, 46, 47 won't be a problem, you know, once it swings through here. Okay, I mean, excuse me, 47, then 49, 51. You can see how all of a sudden, you know, you begin to get into the 50s. If you go further out, you can take a look and see that if you clear the 50 level, then you're talking 57 area. You know, the talking heads will come out on TV and talk about oil, but I like it in the short run here. Getting through here, we have EIA today. Getting through here is critical. That's a $45 level. Basically, we're narrowing up our range here. So this bulls have to clear this area here. Okay. Gasoline. Okay. Gasoline talked about the long heating oil, short gasoline spread. We are getting a move in gasoline, and with the products, they should move higher, but I preferred long the heating oil versus the gasoline for now. With oil moving up, the products should also. Okay, heating oil. All right, I preferred heating oil over gasoline. This is good bottom here. Set your alarm underneath here. That would be a full reversal. You can see, I believe this is 4-cent ranges. So you can play 4 cents there versus the gasoline that I believe it was 2-cent ranges here. Basically playing the 2-cent ranges here. And on heating oil, like 4-cent ranges. You can cut it in half if you want, or whatever you prefer. But heating oil, I like the heating oil. I just don't prefer gasoline at this time. Each their own. Okay, so we have natural gas. Natural gas is a breakout. I'm assuming we will have a retest of the breakout area. Whoops. What did I do? Whoops. What did I do with the Kevin? Wow. I did not know I could move the whole thing. Huh. Well, isn't that just awful now? Natural gas. I don't know where I grabbed it. Oh, that's quite the interesting deal, isn't it, Kev? Window. Bring the front. Yeah, whatever. There we go. Silly Kevin. All right, a pullback in natural gas to retest the breakout areas. I'm looking at this. Clear. All right, go back here. Yeah. All right, so you blast on through just like with sugar. Okay. Typically, there's a retest of the broken resistance area, and that's what I'm looking for to add to longs. There's resistance at the 320 area, and then 340, 360, and $4 for 2018, and then $6 for 2019. That's how I'm looking at it. That's how I'm playing it. Trading it from the long side of things. Okay, cocoa, prefer cocoa on the downside. So any rally, short any rally. And cocoa. Cocoa's also traded in British pounds, so be aware of the British pound too. Here is coffee. Possible pause here. I pointed out Starbucks as pausing possible channel and breaking through. I like coffee on any pullback. This is like, say, your cup and handle type of deal. Remember, these funds are going to come just barreling into these commodities like coffee and cotton, that kind of thing. So I like the pullbacks on coffee. These are going to be, I think, if they pile in like a thing, sugar and coffee and cotton, and they're just going to run the gamut, the gauntlet too of these commodities. Corn, seasonal, lifting of the hedges, bringing commodity to the market. If you get anything up in this area, please hedge your future production. I'm talking to producers. You want to hedge next. I think we'll see below $3 in 2017. Cotton, you can see it here. If you like trading ES, the same type of deal. 10 points or 1 penny, $500. So if it goes from 66 to 67, $500. I'd like to see cotton come back down, but I expect the funds to do all kind of wackiness in there too. As you can see here on this chart, back in this area, this would be Glencoe did not have stops and lost a couple of $1 billion that they admitted to. Okay, so also the interesting thing with cotton, way back when, they were able to GMO to the boll weevil, and cotton prices just cratered. So you have this going on, but we're back to Mother Nature and droughts and floods with cotton. Okay. Lean hogs, if you're a producer, any bounce, work on your contracts. For those buyers, utilizers of the products, good time to start start push that product. I prefer mine to be thick cut in 2 pound, 3 pound packages. Move it or lose it. And the nice thick plastic allows me to freeze it. It's too hot for me to hang it. Plus the rascals around here. I think we have mountain lions. And it's 120 degrees here and low humidity. So I don't know what that does to a carcass. I'm going to say turkey jerky. All right. Oh, what did I put outside? A watermelon? 3-4 days later, it was a shell. I mean, a shell. Like put in your cereal and add soy milk or whatever. What did I see? Cashew milk? All right, hogs. Live cattle. I want to become want to get into the cattle business and the retail side, buying $11 steaks and selling them for $30 kind of thing. That's how I look at it. $20 a head. There you go. Cafe/trading house. Yeah, they come in steaks. All right. Live cows, anything. I still see prices headed lower. What do we have for lower looks? Yeah, you can see that it can go lower, and the lower, that's it for the commodities. We're probably going to get some sort of mad cow talk or whatever to try and put in the bottom here. All right, see the little hammer guy there? So the short-term type of deal. All right. Okay, cattle, lumber. I like it on the long side for the housing. We should be in the housing build now. Housing boom is going to be a little bit of misnomer because of the baby boomers. What are we going to do about their existing homes? Maybe the children will live in them like they used to do years ago. Soybeans looks like a pause underneath the Fibonacci line. As for producers, I think this is headed lower going forward to 2017 and 18. So any prices above 10, hedge. Hedge your future production. Sugar, retest of the breakout is typical of the move. Like I said before, the funds piling into this, but this has had a pretty good move so far. It has doubled. Okay, but as we've seen in the past, sugar can go higher. Okay, that'll be quick to 24. And then I'd probably do, if I'm long, start selling off options. All right. And let's see here. Wheat, talked about wheat on the accumulation plan. I prefer it. Started December to March for now. It's basically just a few pennies off of the $3.99 awareness of beginning to accumulate a wheat position. I'm looking forward, like 17, 18. And that's the end of that on the commodities. Thank you for stopping by. We have FOMC forecast today. And I'll see you on the boards. Thanks for stopping by.